Euro USD's daily chart. And at this point, let me point out that should you have any suggestions about any trading instruments which you would like to have a look at, just let us know in the chat box. If we have time, definitely we'll have a look. If not, we can always do it tomorrow. We're going to be mixing technicals with fundamentals to have a more holistic approach about the markets and each trading instrument. Now, starting the discussion, overall there is a maintenance of the market's expectations about the Fed actually starting to cut rates. I would like to be a little bit more specific about this. When we're talking about the market expectations for the Fed to cut rates, we're talking about a 25 basis points rate cut being priced in September, another 25 basis points rate cut being priced in November, and a double rate cut being priced in for December. Now, all of that tends to be implied by Fed funds futures. And at this point, let me mention here that the market's expectations may be overstretched. In any case, the dovish orientation of the market for the Fed is clear. And in my opinion, is the key factor behind market movements in the past 2 or 3 days. And when I'm talking about market movements, I'm not talking only about the FX market. We're talking also about US stock markets, precious metals as well. So I think that it would be a key event to watch out for. And I'm highlighting to this end practically the release of the Fed's meeting minutes for the late July meeting. Should the document more or less verify the market's expectations for extensive rate cuts to come, then we may more or less see further weakening of the US dollar, while at the same time we may see US stock markets rising and gold's price rising as well, given the negative correlation of the precious metal with the US dollar. The second issue I would be highlighting regarding the Fed's intentions would be the Jackson Hole Symposium. It's on Friday, at least Fed Chairman Powell's speech is on Friday. Now, I wouldn't place so much weight on BOE Governor Bailey or ECB President Lagarde. Focus is on Fed Chairman Powell and what the Fed's about to do. He will be speaking about monetary policy, the US economic outlook. Now, should the Fed chairman actually confirm the market expectations and imply that extensive rate cuts are on the way, that could weaken the USD and support US stock markets. On the flip side, should the Fed chairman actually sound less certain than what the market expects about any rate cuts to come, or show some hesitation towards extensive rate cuts, that would practically force the market to reposition itself. And that would be a result practically of the market's expectations being denied. And in such a case, we may see the USD gaining asymmetrically. I would expect it to surrender substantial part of the past 2 days' losses since Friday, which in turn could weigh on your stock markets and weigh on gold's price as well. Now, for the time being, we note that we had the strengthening of Euro USD in the past 2 days. Do not be fooled. This strengthening of Euro USD is not a result of Euro strength. It's more a result of USD weakness. And we can see how we have to clear large green candlesticks. One for Friday, one for Monday. Today we see some hesitation. It's characteristic that we're talking about the doji candlestick, at least, or pretty near to such a thing. And that tends to imply that there is some hesitation among USD bears that they may have reached a little bit too far. On a technical level, I would be noting also that an easing of the bullish movement of the pair would be acceptable given that yesterday's movement was able to breach above the upper Bollinger Band, which may slow down the bull somewhat, if not cause a correction lower. At this point, we have to note also the upward trend line, which tends to support or at least show the limitations of the upward movement. Now, for a change of the bullish outlook, we would require a clear-cut breaking of the upward trend line, which would be, in my opinion, the first signal of an interruption of the upward movement. The market sentiment remains bullish. It's characteristic how the market, or if you prefer, the RSI indicator, has reached and actually slightly surpassed the reading of 70. It's at 71, which implies a very strong bullish market sentiment for the pair. On the other hand, the pair may have reached overbought levels. And should that be the case, we may see it correcting lower. But any correction lower, once again, remains just that, a correction, as long as practically the upward trend line we have just drawn on the chart remains intact. So should the pair correct below the 1.1655, which by the way has turned into support line, we will have to change that, but fails to breach the upward trend line, then we still have a bullish momentum in place. It's just a correction. Now let's correct the R1 and turn it into support line, given that the price action has moved above it. And let's go hunting for a new ultimate resistance line. We are seeking for a peak higher than this one. And we will have to go most probably way back. We're going back up until this is February. Sorry about that. You can see how the level provided resistance here and here, and was aimed for here and tested here again. So that seems to be a pretty valid level in my opinion. That's the one. 1.1385. Let's correct also the S2, the R2. At 1.12, sorry, 1140, no, 1250. There you go. Locking everything in, readjusting the chart. Let's correct the labels as well. Kind reminder here, we're talking about the daily chart, not to be mixed with any other time frame. The S3, which is now being placed at 1.0905. The S2 at 1.0980. The R1, sorry, the S1 at 1.1065. The R1 at 1.1140. The R2 at 1.1250. And the R3 at 1.1385. I know that the distance between the support lines and the distance between The resistance line is unequal. Actually, the distance between the latter, the resistance lines, is far wider, which tends to reflect also wider past movements. In my opinion, I would like to see how today's candlestick plays out. It could be forming practically a new peak, which would be advising practically to move the S1 a bit higher and turn into a resistance line. It's something which we will have to play out, especially in the American Open, which in my opinion will be quite interesting. For the time being though, we tend to maintain a bullish outlook for the pair. And if that's the case, we may see the pair actually aiming, if not reaching, the 1.1140. The movement of the past 2 days tends to justify such results. Moving now to USD/JPY. USD/JPY, in contrast to other trading instruments, FX pairs, major FX pairs, is on the downside, which more or less is a result of the inverse relationship. It's not like the previous Euro USD, USD/JPY, we have the US dollar as the base currency, and it's weakening. Thus, we see also in reverse a similar result. Practically, USD/JPY has been dropping over the past 2 days. That means Friday, Monday, and it seems to have some very, very slight bearish tendencies today. The RSI indicator has risen, yet remains just above the reading of 30. It's actually at 35, which tends to imply that the bearish sentiment may have eased a bit, but it's still there for the pair. The upward movement was interrupted yesterday. We tend to maintain a view that the bearish sentiment seems to have more room to go. And if that's the case, we may see the S144.25 being broken, and the pair may start aiming for the S241.40. On the other hand, a stabilization given today's inactivity is also possible, and for a sideways movement, I would expect the price action to remain between the S1 and the R1. For a bullish outlook, I would require the pair to rise, breach the R148.50. It will have to form a higher peak than this one, and that may take a couple of days. So should the pair actually breach the R1 and start aiming for the R2 actively, then we would be shifting the upward trend line to the right and allowing for a new upward outlook or bullish outlook to emerge. Let's have a look at cable. Now for cable, things are a little bit more clear cut. We have 1, 2, 3 candlesticks in the greens. Today's the 4th. Practically the rise of the pair has started since last Thursday. The upward trend line remains quite strong, and actually the price action has accelerated somewhat. I would be noting here that the RSI indicator is rising, has not reached the reading of 70 though, which tends to allow for some more bullishness as the chance of a correction lower is narrower. On the other hand though, caution is advised, as the price action of the daily chart has reached, if not breached, the upper Bollinger Band. Statistically speaking, it will be difficult for the pair to breach above the upper Bollinger Band, or even if so, it most probably will be short-lived. So for the time being, we tend to maintain a bullish outlook, and should that be the case, we may see the price action forming a higher peak than this one. So the price action has to breach above the 1.3040. On the other hand, be advised we may see relative stabilization of the pair, given that the price action is struggling, as we have mentioned before, with the upper Bollinger Band. Now, should the bears take over, or if you prefer for bearish outlook, the bar is pretty high. It will be most probably pretty difficult to achieve that. But in any case, it's possible and should be covered. Should the bears take over, or if you prefer for a bearish outlook, we would require the pair to drop, definitely breach the upward trend line we have mentioned, signaling interruption of the upward movement. But I would require the pair to also breach the 1.2890 support line and start aiming for the 1.2775. The break of the S1 has to be clear for a bearish outlook to emerge. USD CAD. This is an interesting chart. And here we may see some fuzz, as we may be getting some conflicting fundamentals. Before that, though, let's start with the technicals. USD CAD has a clear-cut downward trend line guiding the pair lower. It's characteristic that the pair even corrected somewhat around the 13th, 14th, 15th of the month. Yet, since Thursday has restarted its drop lower, so since Friday, and that seems to be maintained today as well. So it's going to be quite interesting to see whether the downward motion will be maintained, given that we have the release of Canada CPI rates for July today. That's a fundamental issue. And the CPI rates at the headline level are expected to slow down. Not much, but still do. And reach 2.5% year on year. The big question here is, should that be accompanied also with a slowdown of inflationary pressures on a core level, i.e. the core CPI rate for July? Then we may see the Canadian dollar weakening. And the main issue behind the easing of inflationary pressures within the Canadian economy would be that it could instigate or at least solidify market expectations for BOC, Bank of Canada, to start cutting, not to start, to continue cutting rates in the September meeting as well. So that the release of Canada's CPI rates later today at the early beginning of the American session could actually have a bullish effect on USD CAD, as the Canadian dollar could weaken once again should the CPI rate slow down as expected or even more. In that case, we may see the downward trend line being threatened, but we wouldn't change our bearish outlook as long as the downward trend line remains intact or it's just pushed a little bit to the right. A test, a forwards break, that's acceptable. But should the pair drop below the downward trend line within the day once again, I think that would be more or less a signal that the bears have it. Let's not forget that we have a recess at USD CAD given the release of Canada CPI rates for July today, but a possible enhancement of the market's expectations about the Fed cutting rates in the coming months, as described before, could actually weigh on the pair once again, given the weakening of the US dollar, the possible weakening of the US dollar, because nothing's certain. And should the bears maintain control, we may see the pair breaking the S1 1.3590. Now, the S1 is a pretty valid level in the sense that it was tested to the downside once, twice here. That was once in early mid-July, the 11th of July, and once in the mid of May. However, it was also tested to the upside. You can see it here, how the price action tested it and corrected lower again and again and again. So I consider the S1 as rather key, and should that be broken, then the gate is open for the pair to drop as low as 1.3475, a level which was tested extensively in the past. On the flip side, should the bulls take over, which for the time being seems to be far-fetched, given the clear-cut downward movement, the downward trend line, and the RSI indicator, which is nearing the reading of 30, implying a rather bearish sentiment of the market for the pair. But nevertheless, it's possible and it should be covered. For a bullish outlook, we would require the pair to A, breach the downward trend line and the first signal that the downward motion has been interrupted. But that's not enough for a bullish outlook. For a bullish outlook, I would also require the pair to breach the R1 1.3720. An alternative view, which could also materialize, however, is also a bit far-fetched, would be a possible stabilization of the pair. And in that case, we may see the price action of USD CAD actually breaching the pre-mentioned downward trend line, but remaining within the boundary set between the R1 and the S1. It would be a sideways motion, something like here. Let's have a look at the Aussie. On the rise, clear-cut rise, may I add. Let me extend the upward trend line. And the pair has breached the 0.6710. So we turn this into a support line. Let's go hunting for a new ultimate resistance line. Unlocking the chart. That's not enough. There you have it. I know it's pretty wide, but look at the strength of this movement right here. It was very, very intense. So I'm keeping it. That would be the 0.7010. In red, please. Locking it in. Readjusting the chart. Let's correct the contents of the labels. Starting with a new R3, which is set at 0.7010. The R2, which is set at 0.6870. The R1 at 0.6795. The S1 at 0.6710. The S2 at 0.6575. That's it. So the outlook is definitely bullish. The upward trend line tends to suggest it. And at this point, I would be also highlighting the fact that the RSI indicator has been rising and nearing the reading of 70, implying a bullish sentiment among market participants for the pair. Now, on a fundamental level, I would be noting here the release of RBA's last meeting minutes. They are the August meeting minutes. And it was interesting. The document showed that practically RBA policymakers, I think, were tempted to actually hike rates yet decided not to, and more or less allowed for the idea that rates are to remain stable for a prolonged period of time. And when we're talking about stable, we're talking about stable at a high level. So the bank overall tends to remain hawkish. And in my opinion, given also that other central banks are about to start cutting rates, like the Fed, or are already cutting rates, like the ECB and BOE, then we may see the Aussie being supported at the monetary policy level. Because practically the interest rate differentials between RBA and other central banks are going to be widening possibly. And that may keep the demand for the Aussie up. In such a case, overall, and should we see the bullish effect being maintained, we may see AUD USD rising, breaching the R1 0.6795, and start aiming for the R2 0.6870. In the long term, it could go for higher. But for the time being, once again, we highlight that the movement we're seeing right now is USD driven rather than Aussie driven. So practically, you can see how the same hesitation which we had mentioned in the Euro USD analysis is also present here, which may imply more or less that should the USD continue weakening over the coming week, we could see AUD USD rising as well. And at this point, on a deeper fundamental level, we have to note also that the Aussie is considered as a commodity currency, and that provides it with a riskier nature. So whenever we have a more positive market orientation, a more risk on market orientation, that tends to benefit the Aussie. And that's the case now. The market, in expectation of the Fed to start cutting rates, has provided with this optimism in the markets. You can see it also in your stock markets, which have been on the rise. So riskier assets tend to be more supported. And in that case, we may see the Aussie getting some support on a deeper fundamental level as well. Okay, let's have a look at USD CHF. Once again, the pair reflects the weakening of the US dollar over the past 2 days, and today. And may I add that today, in contrast to the Aussie and the Euro, CHF shows a wider divergence in the price action. The upward movement has been interrupted, that's clear. For the time being, we tend to maintain the view that the pair may stabilize, and for a bearish outlook, we would require the pair to breach the S1 0.8555. In my opinion, a breach of the S1 would be the signal for a bearish outlook. Up until then, I'm waiting for a stabilization of the pair. On the other hand, I have to note here that we have a number of signals which tend to be more on the bearish side. The one is the fact that the RSI indicator is dropping and is aiming for the reading of 30, has not reached just there yet. You can see it right here. And actually right now it's at 37. So there is a bearish predisposition on behalf of the market. And the other fact I would like to point out in favor of the bears of USD-CHF would be the declining moving averages. We have in the blue line the median of the Bollinger Bands, the 20 moving average. In the orange line, the 50 moving average. In the green line, the 100. All are pointing downwards, implying that the bearish outlook could be present already. Once again, though, I'm a little bit more conservative, a little bit more cautious. For a bearish outlook, in my opinion, I would require a clear breaking of the S1 0.8555. Now, let's move out of the FX market and have a quick look at gold, WTI, and US stock markets. Starting with XAU USD gold, this is the daily chart. We can see a clear upward movement. The pair has distanced itself decisively from the record high levels and has breached the 2510, so that has to be turned into a support line. In my opinion, next possible target for the bulls could be set at 2650. I have to tell you guys that Boys at Research highlighted that wider distances could be adopted between the resistance support lines, and that would be an interesting feat. My opinion, once again, I tend to be a little bit more on the cautious side, and I'm not willing to quite adopt such levels yet. Let's correct the labels though. Starting with the S3, which is now being set at 2450. The S2 at 2180. The S1 at 2510 to be more easygoing. The R1 at 2550. And the R2 at 2600. The R3 at 2650. So the price action is going up. I think that's clear. And it's a little bit more fundamental. Now gold's price is being pushed higher practically from the weakening of the US dollar. The gains of gold's price have been somewhat capped. And I would be highlighting practically two factors for that. The first would be that US yields over the past week were on the rise, albeit having stabilized somewhat today and yesterday. But the rise of US yields tends to take off the shine somewhat from the precious metal, given that US bonds are antagonistic to gold on safe haven level. The second issue I would be pointing out here would be practically that gold bulls are entering uncharted water. And it may be somewhat worrisome for gold's price. Third issue I would be highlighting here would be the safe haven nature of the precious metal. And at this point, I would be highlighting the negotiations between Israel and Hamas about a possible ceasefire. Now, despite Israel actually accepting the ceasefire deal, which was proposed by the US, by US Secretary of State Antony Blinken, Hamas has still to verify it, and I don't think that would be so easy. Nevertheless, should Hamas also verify the ceasefire deal, then we may be talking about some bearish effects on gold's price, or at least some further clipping of gold's gains. So in general, a ceasefire would be having a bearish or an adverse effect on gold's price. At this point, I would be highlighting that that's not necessarily the case. We may see Hamas rejecting the deal, and in such a case, we may see the risk of a possible conflict also with Lebanon being increased. And that may provide some safe haven inflows for the precious metal. There's something which has been bothering me, and I would like to mention it. It's the S3 level, and I'm going to be placing it a little bit lower on this show here. And that would be the 1.2435 level. That's it. So once again, for the time being, we tend to maintain a bullish outlook for the precious metal. Set the next possible target for the bulls at 2,550. The RSI indicator is rising, nearing the reading of 70, which also tends to support the buildup of bullish sentiment of the market for the precious metal, which could more or less support the upward movement. Let's have a look at WTI. WTI prices have been falling. Here we have a wide movement here. And for a bearish outlook, I would require the oil's price to, with the WTI, oil's price to breach below the S1 7140. Practically, I would require a lower show than this one. So the price action has to fall, breach the S1, and start aiming for the S2. That would allow us to start drawing a downward trend line, which will be resting practically on this peak and this peak. And we will be catching almost this peak as well. The RSI indicator is falling, nearing the reading of 30, also implying the buildup of bearish sentiment of the market for WTI, which could be enhanced. And note how the 20 moving average has a downward slope, practically underscoring the downward movement. More or less, I would expect the downward motion to be maintained for now. But at this case, I would be highlighting two fundamental issues for oil traders. Once again, the first would be the Israel-Hamas negotiations. A possible peace plan could allow for oil's price to fall further, given that the threat on global oil supply lines will be less. The second issue I would be noting would be US oil reserves. We have the AP weekly crude oil inventories figure coming out today. Should there be a wider increase of US oil inventories, that would imply practically that the production side of the US oil market was able to surpass aggregated oil demand in the US. And that would imply practically a slack in the US oil market, which could allow oil's price to fall even further. Okay, let's have a look at US stock markets. I would be having a look at just one, and that would be S&P 500. A very steep upward trend line. In my opinion, a very worrying steep upward trend line. This thing has to correct lower at some point, one or the other. This cannot be maintained. It's too steep, too high, too fast. On the other hand, though, on a technical level, further rise is possible given that the RSI indicator has risen above the reading of 50 and is still having some room between hitting the 70 level ceiling. Also, the price action has not reached the upper Bollinger Band, which allows for some room to play for the bulls here. So that should be covered as well. On a fundamental level, once again, any verification of the market's expectations for the Fed to cut rates could fuel the rally of US stock markets. On the flip side, should the Fed start signaling some hesitation towards rate cuts, that could weigh on US stock markets somewhat. And that should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Webinar. So today we'll be on to our third part of our trade management series on idea and validation. Okay, so as per usual, before we get started, just a disclaimer and risk warning. So our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. So, a disclaimer, the information in this webinar should not be considered investment advice and or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, so I'm Melanie and I'll be your speaker for today. I'm an investment analyst from Everest Fortune Group, who were finalist for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. We'll do a brief recap on the first two parts of our trade management series. So that would be the anatomy of a trade, take profit, stop loss placement, partial profit, and then we'll get into this week's concepts on idea and validation, and then we'll go through a couple of examples. So once I'm done with the slides, then we can look at a couple of live analysis charts. So feel free to pop in any of your requests for any currency pairs or commodities that you guys would like me to go through, and I'll be happy to go through them after I'm done with my slides. Okay, feel free to pop in any questions you have into the chat as well. Any questions at all throughout the webinar, and I'll be happy to answer them as well. Okay, so let's go ahead and get started. So firstly, we have anatomy of a trade. So of course, you have the basics, your entry, whether you are going in for a sell entry or a buy entry, you still have to pick a level of entry, followed by your stop loss levels as well as your take profit levels. Okay, and then we get into our trade management part of the trade, which is the break even, the partial profit, trading stop losses, as well as idea and valuation, which is what we'll be going through today. So just a recap of where you should place your take profit as well as stop loss. So firstly, we have, in this example, we are looking at a buy sell entry, as you see, because our take profit um is a support level over here, right? So our entry will probably be somewhere in the middle here, and then we're going in for a sell towards our take profit. Okay, so for this example, our take profit is placed before or above our major resistance area, whereas our stop loss is placed above or beyond a major resistance area. Okay, so maybe I'll just show you guys I'll just show you guys some tips and tricks if you are a beginner and you're just starting out. Okay, so you can look at the Forex Army. So we have a couple of guides over here Okay, you can look at the trading guides. Ooh, okay. So if you're not too familiar with Fibonacci as well, we have a pretty in-depth explanation here. Okay, and just some pretty basic but important things to take note of if you're just starting out with technical analysis. So over here, we are focusing on Fibonacci, but let me show you. Yeah, so this is typically what we recommend. Okay, even, oh, okay. So even if you are talking about a major resistance area, it doesn't have to be a Fibonacci confluence per se, just as long as it's a major resistance area that you have identified. Okay, you would place your take profit before a big confluence area, and then your stop loss will be placed beyond it. So in this example that we're looking at, we're going in for a buy entry. So you can see this is how we typically would recommend you to place it. So your take profit would be um, right before your major resistance area. Your stop loss would be under it. Okay, whereas in this previous example, since we're going in for a sell entry, similarly your take profit will be before, but in this case, it would obviously be above the major resistance area, and your stop loss area would be up above it as well. Okay, since it's beyond the major resistance area. Okay, okay. Yep, so you can go ahead and take a look at this website. Feel free to explore. We have some examples, some trading guides for you to take note of, and support and resistance, some MT4 installation guides as well. Okay, and trading tools. So you can go and explore that on your own. Okay, so next, this is what we went through last week. So last week we went through break evens and partial profits. So if you missed that, I'm just going to briefly go through what exactly a break even and partial profit is. So starting off with break even, it's a level where you are in profit and recognize that there is a risk of reversal, which means there's a chance that price will hit back to your entry or even worse, perhaps your stop loss, right? So it's basically you saying that if I'm right, price will go all the way to my target, but if I'm wrong, I will get out. Okay. So here in this example, our entry level is this blue line here, and it's in line with this double swing high resistance area. So this is our entry level because price has broken out of this swing high resistance. Okay. Wait, let me just make sure that okay. Okay, great. You guys can see my screen. Okay. So, what was I saying? So price has broken out of this double swing high resistance, and this is our buy entry level. Okay, so it's testing this level a bit, and then you can see that it's triggered our break even level, which is at this swing high level. Okay, so it's triggered this level and it's reversing back to our stop loss, or rather to our entry. So originally this level here is our entry, but then and our stop loss is way below over here, right? But because we noticed this reversal, because of this break even, right? So once price is reversed off of the break even, then we want to quickly move our stop loss over to our entry so that even if price does reverse back down, at least we get out of the trade at break even and protect our position. Okay, so if in this case it doesn't really affect your take profit because at the end of the day your take profit is still here at this green highlighted area. So it doesn't affect anything in terms of your take profit, but it protects your position and it ensures that even if price continues to rise to your take profit, then of course that's great and you would make a profit. But even if it reverses back down, which it is threatening to do, since it's testing our break even level, our position is protected over here. Okay, so here's a example from a chart. So our entry level in this case is a swing low. Okay, at this it's at this swing low at 0.68314. Okay, and we are noticing that we do have a Fibonacci projection level. So Fibonacci projection, I'll go through it a bit during our chart analysis, but basically you're looking for a flash kind of shape. So you see here, there's like a lightning bolt shape, okay? And for that we used 61.8, 78.6, as well as the 100%. And we're noticing that the 100% Fibonacci projection lines up with our entry, okay? So we're expecting price to bounce off of our entry and hit towards our take profit. Our stop loss is placed at this swing low and our take profit is placed at this swing high here. Okay. So over here, we're noticing that we have a couple of levels that are lining up with our partial profit. Um, okay, that are lining up at this level. Okay, so this level is what we call our partial profit, and I'll get into that a bit. But basically, we see this 23.6% and this 38.2% Fibonacci retracement are lining up nicely. Okay, so we're labeling that as our partial profit that's somewhere in between your entry and your take profit. So we see that price has nicely reversed off of our entry, just as we expected. Okay, and it's headed towards our take profit, but it's currently touching our partial profit. Okay, so now what we do, since price has already touched our partial profit, we saw with our break even, we're moving our entry towards our stop loss. So this way price, even if price reverses off of our partial profit, which could happen since this is a confluence area. Okay, confluence area basically means that if there are two or more Fibonacci levels that are lining up in that same area, that just basically makes it a confluence area. Especially because at our partial profit level here, we have two swing lows at this level as well. Okay, so that makes it a pullover um resistance level as well. Okay, so we could see price testing this level here. And yeah, so we are moving our stop loss to our entry so that if it does reverse, we can get out at break even. But we've also made partial profit over here. Okay, and if you see over here, price actually did reverse off of our partial profit level, and it reversed and it headed back down to our entry and stop loss. So this way we got out of the trade at break even, and even with actually a little bit of profit. Okay, I hope this is clear. Okay, now let's take a look at idea invalidation, which is our focus for this week. So idea invalidation um, is usually placed before your stop loss level. Excuse me. So it's usually placed before your stop loss, and it's the level which you basically admit that that your initial trade idea was wrong and you want to get out of it ASAP. Okay, so idea invalidation, or rather invalidation, basically refers to the whole process of testing the validity of your trading idea or your hypothesis. So be it whether you are going in for a buy or a sell. So it involves analyzing the market data, market conditions, and then in order to determine whether the idea is likely to result in profits or not. So if the analysis shows that the idea is unlikely to be profitable, then it's considered invalid, and then you as a trader may choose to discard it or modify it. So the goal of idea validation is to reduce the risk of making poor trades and increase the chances of success by only pursuing valid and well-researched trading ideas. So um let's go through this example here. Okay. So in this case, we are placing our idea validation below our stop loss line here. Okay, and our entry is at similarly at this swing high, uh, double swing high resistance. Okay, and we're going in for a sell entry. Um, yeah, we're going in for a sell, and we're hoping for price to drop all the way down to our take profit over here. Okay, so notice how previously I mentioned that we place our take profits before major confluence areas. So in this case, we have three swing lows that line up nicely. So this is typically considered to be a major support area. Yeah, so that's why we place our original take profit or our take profit before that level. Okay, so okay, so we're seeing price nicely reverse off of our entry as we expected, and it's heading towards our take profit. Now we see it reverse and it's actually heading back up towards our entry. And the point where we decide that we want to get out is at this idea invalidation part. Okay, so at this idea invalidation, then we will quickly move our take profit in this case to our entry. So previously we were moving our stop loss to our entry for break even, and now instead of that, we are taking our take profit and we're moving it to our entry instead. Okay, so it's pretty similar in logic, just that we have different names for it, I guess. And yeah, and it's basically the point where you admit that you're wrong and then you move your take profit to entry so that it gets you out of a losing trade. So you can see in this example that we were able to get out of it at break even before price rose and further and would have stopped us out. Okay. So yeah, so idea invalidation refers to the process of evaluating a potential um trade idea and determining if it should be disregarded or acted upon. So essentially, it's a way of determining if a trade idea still holds up in light of new information or market conditions. Okay, so here's how the process of idea invalidation typically works in trading. So firstly, you will have the initial trade idea, and the trader has the initial idea would be about a potential trade that's based on their analysis of market conditions, technical indicators, or other factors. Next, we have evaluation of the idea. So the trader has an initial idea about the idea, right? So then they will evaluate the idea by looking at current market conditions and other um relevant data, okay, such as economic data to determine if the initial trade idea still holds up. Now, the invalidation criteria, the trader then establishes criteria for invalidating the trade idea, such as specific price levels or market conditions that would cause them to reconsider the trade. Next, we have monitoring. So, of course, after moving your stop loss levels or your entry levels, you would or your take profit levels rather, then you would have to monitor the market, and the security in question to see if the invalidation criteria are met, and then invalidation. So if they are met, then the trader may choose to either exit the trade or adjust your position in the ways that we've mentioned earlier. Okay, so if the criteria are not met, then obviously the trader might continue to hold the position or you can even add to it. So let's look at some examples on the charts. Okay, so firstly we have our entry. Okay, so our entry is at this swing low here. Excuse me. So our entry is at this swing low here, and our take profit is placed at this overlap level. An overlap level is basically when there are bulls and there are bears that are respecting that area. So basically when there is a swing low as well as a swing high that line up in the same level. Okay, and we see that this level also lines up with a 50% Fibonacci retracement. Okay, so we've decided to place our take profit at that level, and we're expecting price to reverse off of our entry and head towards our take profit. Okay, so it's heading back, it's heading down towards our entry. Okay, now this is what we call a Fibonacci extension. Okay, so the 127.2% is a Fibonacci extension, or what we call a Nike tick. So I'll get into this in a little bit. But basically you are looking for the shape of a Nike tick. As you can see over here, the V shape is inverted. So this is an inverted Nike tick shape. So we're the 127 lines up with a minus 27.2. And this minus 27.2 is what we call a Fibonacci expansion. So for Fibonacci expansion, we are looking for, like the Fibonacci projection, we're looking for flash shape or a lightning bolt shape. Okay, which you can kind of see over here as well. So minus 27.2 lines up with this 127.2. Okay, so this is an area that we are keeping an eye out for and placing our stop loss below. Okay, so our stop loss, as I mentioned earlier, we place our stop loss beyond any confluence areas. So that's why we're placing our stop loss not at that level specifically, but below it. Okay, and we're noticing here as well that this 50% Fibonacci retracement also lines up nicely with a take profit. So we have two levels lining up with this overlap level at our take profit, which makes it pretty significant. Okay, now our idea validation level is placed exactly at that level since our stop loss is placed below it. Okay. So now we see price has broken out of our entry. Okay, it hasn't really bounced off of our entry as we expected it to. In fact, it broke out of it and it actually dropped towards our idea invalidation. Not as low as our stop loss yet, but our idea invalidation level is definitely triggered. Okay, so what we do now is we move our take profit to our entry. Okay, so this way we can minimize losses and get out of a losing trade. So you can see here, we're moving our take profit to our entry. Okay. And then once price has continued to rise from our idea invalidation level, okay, it's rising to our take profit level or our original entry level, and we got out at break even. Okay, and you can see if we had continued to place our take profit over here, right? We would have gotten stopped out. Okay. Okay, I think that's it for my slides. Now we still have half an hour left. Now let's take a look at some charts. Feel free to pop in any requests into the chat. Let me just take a look at let me just open my charts. Okay, let's see. Okay, we can take a look at AUD. Okay. Okay. Yeah, let's go ahead and take a look at AUD on a weekly time frame first. Okay, so on a weekly time frame, we see that the Aussie dollar is kind of moving in this descending trend line. Okay, so it is pretty bullish on a weekly time frame. if we look at the daily time frame, it does look pretty bullish as well. We also have a descending trend line. Okay, we might even have a trend channel here. Okay, we kind of do have a descending trend channel as well. Um, Basically, for a valid trend channel, you need to have at least two touches on top and two touches below. Okay, at least. Okay, now let's look at 4 hours. Or actually, on our daily time frame, let's plot out some levels that we want to take note of. Okay, so this will be my first resistance at this level here. And then my first support maybe just here. And this is a overlap level as well because we have a swing low here. Ooh, okay. So this is the reason why we want to pull it back as far as we can so that we can see how many times price has tested this level before. So I have one swing high here, swing low here, and a couple of swing highs here as well. So pretty significant level there. And next I'll just place my second support below here. Okay, I have a question. How do you trade the news? Um, okay, so some one way that you can trade the news, let me just show you what we like to use. So you can, firstly, obviously, you would probably have to make use of a economic calendar. So there are a lot of economic calendars out there in the market. One that we like to use is Forex Factory. So I'll just show you guys Forex Factory, I guess. Can you guys see my screen? Yes, okay. So yeah, so I like to look at Forex Factory and then you can take a look at all of the news events for the week, apply settings. Okay, and I am only looking at the high impact events here. Okay, but you can click on this green filter here and it'll give you all of the low, medium, and high impact events. And you can control which currencies you're looking at as well and the different event types. Okay, so tell you the previous data release, the forecasted release, and then once the data is actually out, it will also give you the actual value. So you can see all of the events for this coming week over here, just at one glance. If you are interested, there are a couple of forums as well, so you can take a look at investor sentiment as well as other traders' thoughts. And then you can look at the news from the different news articles and news outlets. And yeah, that's basically how you trade the news. Go ahead and read up on whichever that stands out to you. If you are trading euro, you could maybe look at or maybe AUD, let's say, right? So we had the cash rate yesterday, and the cash rate was released at 4.35%. But the forecasted was the same, the previous value was also the same. So we can see how this exactly impacted the markets. Okay, so we can see 2:30 p.m. on Tuesday. So we can see, maybe we'll take a look. 2:30 on Tuesday. Let's look at our 4 hour time frame instead. What's going on? Okay. Sorry, I'm not sure what's going on with my laptop. Okay, got it. So 2:30. Oh, okay. Because this timing is um the timing is a little bit different. Okay. On my trading view and on my Forex factory. So it doesn't really link up. But if we look at the Tuesday, we can see how it impacted the charts, and you can see that price dropped over here and then started to pick up again on Wednesday. But this is on the 30-minute time frame. Okay. I don't think this had much of an impact since the actual data that was released is similar to the forecasted as well as the previous. But things like mm, if you look at the CPI, maybe if we look at Swiss franc in a bit, it was slightly lower than the forecasted. So we can look at how that impacted as well. But yeah, that's basically how you can make use of the news to trade. Yeah, feel free to just copy the names of whichever news event that you're looking for into Google and then look for um, an explanation on what you are expecting, what um, the investor sentiments, but of course also the governments, um, what they are expecting to do as well. Okay, yeah. Um, yeah. Let's get back to our 4 hour time frame. Okay, so I'm going to place my first resistance here, and then my first support maybe just here. And then I think I'll place a first resistance, an intermediate resistance here. Yeah, so if you look here, it'll give you a list of all of the events that's happening for the week. If you want to know more in depth on each of the stories, you could maybe look at um, some of the um, news articles from this list here, because these are pretty up to date, like 1 minute ago. But of course, take all of these with a pinch of salt because it's from different news outlets around the world. So you can take a look at those over here, or you can, like I mentioned, just Google some of these events. No, these happen weekly, so it's it's basically every week. So depends on your trading strategy. So what I'm talking about now is a weekly time frame. So I'm looking at all of the news for that week. Yeah, I hope I'm understanding your question. Okay, so this is my intermediate level of resistance here. Um, Now let's go in with some Fibonacci levels. Okay, So I have a 23.6% Fibonacci retracement that lines up with my intermediate level. Uh, let's see if we have a projection. No. Okay, I have another retracement here. Okay, my 38.2 lines up nicely. 38.2 maybe, yeah, 38.2. So my 38.2 lines up with my first support. Let's see if we have anything else. Okay, my 61.8 Fibonacci projection lines up with um, my first resistance. Okay, so they don't really have to line up exactly because these tend to be areas more so than levels, than specific levels. Okay. And I personally don't like the 0 and 100% because I find it a bit messy. Okay, so let's go in with our indicators now. So I like to start off with MACD and Ichimoku because at one glance you can see exactly what the signals are. Okay, so price is moving below the Ichimoku cloud, so it's giving us a bearish signal. And on our MACD, it's also giving us a bearish signal, which matches our analysis. Okay, and let's see another RSI maybe. Okay, RSI, we have price moving in a descending trend line. Okay, so it's also supporting our analysis. Okay, it's not really a trend line, but you can see over here that um there is a divergence. Okay, so over here price has made a higher high, and over here price has obviously made a lower high. Okay, so that's a bearish divergence. Also supports our analysis, and maybe let's look at Bollinger. Okay, Bollinger isn't really telling us much. Let's look at stochastic. Okay, stochastic isn't telling us much either. Okay. Okay, so we're going for a sell from this intermediate resistance towards our first support. And if you're looking for maybe another sell, could go perhaps even until here. Mm, okay, because price has tested this level many times in the past, as you can see. So price is typically attracted to such strong areas of um, resistance or support. In this case, of course, support. So once price breaks out of our first support, we should have enough downside confirmation that price will continue towards our second support. Okay. Yep, I can pop in the website over here. It's just Forex Factory. Yeah, so this is just for you guys to look at, all of the weekly news events or however long you want that's scheduled for that week or month. Okay, okay, let's look at another chart. I think I mentioned earlier that we'll look at Swiss. Oh, okay. So let's start off by looking at our weekly time frame. You can see it's also pretty bearish on our weekly time frame. On our daily time frame, it's pretty bearish as well. Let's look at 4 hours, also pretty bearish. Okay, and we typically would recommend to continue to follow the trend. So if it's a downtrend, then we will go in for a sell. Uptrend, of course, we're going for a buy. Okay, this is my first support, and you can see once again it's an overlap level of support. Um, okay, and here I have my um yeah, here I have my first resistance. Okay, maybe I'll put a second resistance here as well. Okay, so now I am going to see if I have any retracement levels that line up. Okay, and I have my 23.6 and 30.2. Let's see what else we have. Okay, my 61.8 also lines up nicely. Mm, okay, my 100% 78.6 kind of line up as well. Oh, okay, but it's no longer valid because price has already broken past these levels. Okay, so earlier I mentioned a Nike tick shape, so I just want to show you guys an example. So as you can see here, this is an inverted Nike tick. A upright Nike tick will look something like this. So you want to make sure that price surpasses 100% of the head of the tick before you use this method, this Fibonacci extension. Okay, so for Fibonacci extension, we use the levels that are greater than 100. Okay, let me get rid of this. And okay, we're using a retracement, and then we use the levels that are greater than 100%. So the 161.8 and 127.2. Okay, and you can see that it lines up nicely with our second resistance and first resistance, but because you can see that price has already broken past these levels, so these are not valid. Okay, just wanted to show you guys an example of that. Okay, now let's look at some indicators. So price is moving below our Ichimoku cloud, so it supports our bearish bias, and our MACD is giving us bullish, so we're going to remove that. Let's look at RSI. Um, RSI is giving us bullish. Okay, so let's remove that. Let's look at stochastic. Okay, stochastic is kind of not telling us anything. Let's look at our moving averages. Okay, price is moving above our SMA but below our EMA. Okay, so it's bearish on our EMA but not our SMA. Now let's look at Bollinger Bands. Okay, it's bouncing off of the top band or the upper band of the Bollinger Band. So it does support our analysis. Okay, I think that's it for this chart. So we're going in for a sell from our first resistance towards our first support. Okay. Okay, I think that's all the time that we have for today, but let me know in the chat if you guys have any other questions. Um, Let me just make sure I've answered all of them as well. Okay. Yeah, I think that's it for today. I hope you guys found this session helpful. And yeah, have a great rest of your week, and I will see you guys next week. Bye, everyone.